We got a doozy here today, man. We've got an absolute doozy. So the title on this one, $356,000 in student debt. Woo. So welcome back to Friday Feedback. Friday Feedback, that is. A lot of F's in there, a lot of feedback in there. This is where we get a letter from the community. They write in, we give our 2 cents, maybe our advice, our actionable steps to start putting them in a better spot. So yeah, let's get right into today's letter. So $356,000 in student debt. My journey to becoming free. Whew, that is a header, no other. 15 years ago, I graduated from law school with a dream and a mountain of debt. $230,000 to be exact. The interest rate, you're wondering, crushing 7.5%. By the time I paid the last penny, the number had ballooned to $356,000. Today, I am writing to you with a mix of pride and exhausted relief because I have finally paid it off.
Congratulations.
Beautiful. Absolutely beautiful.
Man, isn't it crazy that we allow people who are 18 years old to take out $230,000 of debt when they have zero idea what they're going to do?
Dude, it makes no
or if the
sense.
job is going to be there.
It makes no sense.
Should be illegal. But unfortunately, the government's the one doing it. So
Yeah. But then again, to get a loan for $356,000, it's damn near impossible.
Good luck. Yeah.
Yeah.
I would like to buy a house, please, and I would like this loan. Oh no, we don't want that.
Yeah. No,
Okay, I want to go to school and get a degree in basket weaving. Okay, yeah, for sure, definitely we could do that.
The definition of predatory. The definition, truthfully. Alrighty. So when I graduated in 2010, the world was still reeling from the Great Recession. Jobs in law were scarce, but I was barely scraping by. I wasn't making enough to cover even the interest on my loans, and they began to snowball. Every month, the balance grew and grew. So did my anxiety. I can imagine so. That's rough. Back then, the more helpful income-driven repayment programs either didn't exist or weren't accessible to someone like me. I made some mistakes too, I must be honest. I should have found a way to get some kind of plan sooner, but when you're drowning, it's hard to see a life raft.
It's one of the hardest things, right? When you're in that muck, when you're in it, it's so hard to get a detached view, to get that higher level. That's why when someone who's like paycheck to paycheck and they're like, I can't see a way out, I understand, because your brain legitimately can't. It only sees right in front of it. It's only surviving.
Absolutely. At some point, in an effort to manage the burden, I made the decision that I later came with its own set of challenges. Okay, I refinanced my federal loan into private loans. At the time, it felt like the right move. Newer interest rate was a bit lower, and the monthly payments seemed a bit more manageable. Surface level. They always get you with the candy, and then they rug pull. But I didn't fully understand what I was giving up. Things like federal protection and the possibility of income-based repayment programs that were introduced later on. Once I made the switch, there was no going back. The private loans locked me.
Let's pause for a second. Yeah. So this is where I think it's very important that you seek professional guidance on things rather than asking random people. This is actually something that's very common still today. Student loans have, since 2010, done nothing but gotten worse.
Yeah.
And we still have federal loans, which I think I might talk about after we're done with this and talk about some of the different ways of repaying your system. But if you ask your mom, your dad, Uncle Ben, or just some random guy on the street, hey, my interest rate is this and it's a federal loan, everyone's going to be like, that's your interest rate? That's so dumb. Reconsolidate it to a private loan and lower that down. Because traditionally, that might have been the right move. And maybe it was the right move for them back when college was 6 raspberries and a nickel.
Yeah. And jobs were guaranteed.
But things have changed substantially. So again, just please do your own research. And just because everyone's running off a cliff, that does not mean that you have to do it too. Just because everyone says, hey, at the bottom, if you jump off this ravine, down there's something. Do your own research before you jump off and hope that there's something down there to catch you. Because that's unfortunately what this person did at this point. So I'm excited to hear how they were able to get out of it.
The private loans locked me into a relentless schedule with no flexibility. When I couldn't make the payments, there was no grace period. There was no pause button. It was brutal. It was a sink or swim. And let me tell you, there were many times where I thought I was going under. Fast forward a few years, though, and I decided I couldn't keep living like this, and I made a choice. I was going to claw my way back out. I built my own business from scratch. There were no guarantees, just grit and the belief that things could get better. My wife and I sacrificed endlessly. We lived in a 950 square foot house with 2 children, skipping vacations, dinners out, or anything that didn't go directly to support our basic needs and our goals. My wife's faith in me was unshakable. Thank God for her. She believed in me when I doubted myself. When the debt seemed too big to overcome, she was there.
Isn't it so powerful to have a person to go on the journey with you? It's not because they're just there. It's because they're able to pick you up when you fall down.
No assistance came from the government or forgiveness programs. This was all on us. Every dollar of $356,000 came from long nights, missed moments, and unrelenting focus. Today, I stand on the other side of the storm, though. I help people for a living. I employ others, and I contribute to my community. The weight of the debt is gone, and with that, the constant fear that haunted me for a decade is over. If you're reading this, struggling with your own student debt, I want you to know you're not alone. It's hard. It's unfair. The cost of education shouldn't cripple people for life. And I'll say it plainly, screw the government and the schools for charging so much and offering so little for support. Truthfully,
Preach.
it's criminal. It's truthfully
Preach.
criminal. But also, know this. It's possible to get through it. There's no magic solution, but with focus, sacrifice, determination, you can make it. So hang in there. And to anyone feeling like they're drowning under student loans, keep fighting. You're stronger than you think. 15 years of toil and sweat, finally free from student debt. How about that? Well, congratulations on getting over
That's
that hump.
huge.
That is no small feat, and that is no small price tag. Truly criminal what the system is doing in regards to student loans. You battled, and you battled, and you fought, and that chapter's behind you. Must be a good feeling.
Greed up and down the chain of people trying to screw other people. And how I don't understand how we can have a system that has predatory towards the people that are going to, like, we're trying to be predatory towards people that are paying people's pensions, that are paying people's social security. Like, it is insane to me. And now people are complaining like, oh, well, these millennials, these Gen Z people aren't having babies. Maybe if we gave them $6,000 in a credit, then they would decide to have babies. You think that $6,000 is going to have someone have a baby? Like, that's, I've been saying the word insane this entire podcast, but that is insane. Like, I don't understand why people don't get it. You saddle someone with $300,000 in debt. You put there's a housing market, so they can't afford a house. They could barely afford rent. And now you tell them, oh yeah, go have a baby is because we need more children to pay for Social Security in the future. And you're falling behind and you're lazy. Go. I'm just going to keep kicking you down over and over and over again and blaming you for every situation because what I went through was substantially easier. But I worked hard too. And not to say that people didn't work hard in the past, but you have to recognize the differences.
So true. It's so true. Nobody is living the same experience as one another. Hey, we're all living different lives. But yeah, these interest rates are crazy. Interest rates on everything are crazy. Credit cards, student loans, it's all a mess. It's companies have been gotten way too predatory. And one thing that bugs me most about our society in today's world right now is, oh, because of inflation, we got to raise price. Because of inflation, we got to raise prices. I don't think so. I think it's just purely corporate greed, masked as inflation, most of the time.
I think it's a little bit of A, a little bit of B. I don't know about all of the other things, but what I do know about student loans, the reason that it happened is this is what happens, unfortunately, when policy to help gets involved in private matters. And the policy to help often has unintended consequences. So when the government decided to step in and said that we will back any loan for higher education, Doesn't matter what the price is, what's going on, we will back it. Well, every single college went, oh, you're going to back no matter what? Okay, then we'll just keep on raising the rates because we know that people are going to pay for it because they automatically have loans that are guaranteed by the government. You don't have a loan that's guaranteed by the government to go and buy a house unless you have the money to be able to pay for it because they don't want you to go upside down. But they'll give an 18-year-old, a 17-year-old who has no idea what they're going to do with their life, ask them, hey, what do you want to do with the rest of your life? Cool, here's $300,000. Go at it. This is the interest rate. These are all the things. But don't worry, once you get that degree, you're going to figure it out. People go into it with the hope and the knowledge because they've been told that that is the way things are going to work. That's going to way it work. And of course, they're too young to have the experience to know that people lie to you because they've gone through their whole life being told what to do by teachers, being told what to do by their parents, being told what to do by their instructors. Now they're being told what to do by some college counselor who is legitimately trying to help these people, but doesn't understand that when you put somebody $300,000, $100,000, $20,000 in debt who has no understanding of how that works and how interest rates can balloon. An interest rate at 7.5%, if you don't make payments, you defer payments for 10 years, it's double. It doubled again after 10 years. There are people with student loans that are higher than 7.5. I think the current one is 7.5. My wife's is like 7.2.
Wow.
And two of the worst ones and have the highest level of suicide for degrees are dentists and veterinarians.
Really?
The reason for that is the amount of debt that you have to go into for both of those professions and the amount of money that you get when you get out. For many people, you feel like you're drowning. You feel there is not a way to get out. And I understand that. So before we get into all of this, I first want to congratulate our writer. Congratulations on doing this. What I want to talk about today in regards to this is different ways of repaying your student loans. I am not an expert in this in any way, shape, or form, but I'm pretty damn good at it because my wife is a part of these systems. So I've done a lot of research into helping her and then helping her friends and getting out of this. So our writer is exactly right when he said that switching from federal loans to private loans was a bad decision. I'm not saying it's always a bad decision, but it is often a bad decision because once you switch to a private loan, you are locked in. It is what it is. There is no deferment. There is no pauses. There is no nothing. It is locked in. Additionally, when you do a private loan and you get married to somebody, now if you die, that loan follows them, follows the marriage. If you were married at the time that you took out the loan. With federal student loans, that loan dies with the individual that took them out, regardless if you're married, regardless of anything like that. I'm not saying that death should be the way out of this, but I'm just saying that's just one of the things. So with federal student loans, it's so confusing because there's so many different plans and Congress is constantly trying to change the plans over and over and over again. My wife and I have been trying to keep up with this. And with the new administration coming in, it's become even more confusing. So the first thing that most people think that they have to do is called the standard repayment program. That's a fixed monthly payment for 10 years. If you're $300,000, $400,000 in debt, you can just imagine what that payment looks like. And now imagine having that payment and also trying to live a life. If you're $300,000 in debt, 10 years, your minimum payment's at least $3,600. You have to have a pretty damn good income to pay $3,600 after taxes and still afford to live. So that's the first one, standard repayment program. Okay. That's available for federal student loan borrowers. That payments are higher than other plans, but they ensure that you pay off your loan quickly. So I typically recommend that for someone who has a lower loan, maybe $20,000. And it also depends on their income. The next one is the SAVE plan. And this is the one that most people are going. And that's called Saving on a Valuable Education Plan. That's what SAVE stands for. Actually, a bunch of BS. But this is an income-driven repayment plan. So you're going to hear me say the word IDR. Whenever I say IDR, income-driven repayment. These plans are active and designed to lower your monthly payments, and they're based off of your income and your family size. So the payments actually change. And borrowers will apply for these loans through the federal student aid website. And I'm going to tell you that website is awful. And every one of the program directors that manage those loans are awful. Any government system is awful. I don't understand how we can't figure this out. Yet Amazon could take my payments every single time. There's never been an issue. Yet the federal government can't figure their head from a hole in the ground. I don't get it.
Yeah.
So do you have any questions before I move on to different plans on the IBR plans?
No
Okay.
questions at all. I mean, this is What a chaotic system we have in America. What a chaotic system. Absolutely.
It's awful, and it's about to get worse, but from me telling you what's coming down the pipe.
Please continue.
So there's the save plan. That's one plan. There are other plans that have options like income-based repayment, which is IBR, not IDR.
Okay.
There are pay as you earn, which is payee, so pay with an E. Then there's revised pay as you earn, which is the repay program. And then there's a pay program without an E on the end. So there's 5 different programs within just the income-driven repayment program. This is why people are so confused. And the federal government is constantly changing how the rules get paid. So I'm just going to give you a brief overview. The favorite plan of mine is the revised pay-as-you-earn plan. So payee. The reason I like this one is that monthly payments are based on 10% of discretionary income, but are never to exceed what you paid in the 10-year standard plan. So you cannot pay more than you pay in the standard plan with this one. Another reason I like this is you can do direct loans for financial hardships. You can stop the payments for financial hardship. Additionally, if you lose your job, you don't have money coming in, you can recertify immediately and stop making payments. And that still goes towards forgiveness, which is the best part about the pay program. Balances that you do not pay off get forgiven after 20 years. So with that being said, say you have $300,000 and you've been working, you've been paying 40 quarters. So not 40 quarters, more than that. You're paying every single month. And at the end of your loan, you've paid $100,000 to your $300,000 loan. But that loan is also ballooned to $300,000. At the end of the 20 years, that loan is to be forgiven, $300,000. So that's why it was one of the best plans. But people don't know that. So they think I have to pay off this whole loan when they don't have the knowledge that after 20 years, it'll be forgiven. Now, when that gets forgiven, at this time, it's called the tax bomb, which means that amount of money that's forgiven will be added to your taxes in that year. So you have to pay taxes on that, but paying taxes on $300,000 is much better than paying $300,000. And my thought process.
Yeah.
Go ahead.
But say I have $300,000 left in student loans by the end. So they count the $300,000 as kind of income. So I could be hit with, like, depending on the state, like a 50% tax on that.
50 is no, it wouldn't be 50. It would be way too high.
Okay.
That doesn't mean because it's federal, really.
Okay. Oh, that's right, because it's federal, it's not state. Okay.
It would probably be somewhere like 20-something percent, like depending on your income, obviously.
Okay.
20 to 30% would be the highest. I think it's 34 right now.
Okay.
Which would still suck, but it's either like, hey, you can pay $70,000 this way or $300,000 this way.
Truthfully,
I'm going to take the $70,000 every day.
Yeah. That's going to be the only way. Yeah. Okay. Cool. I just wanted to clear that up for me.
So that's the payee program. Then there's the revised pay as you earn, which is very similar to that, but then that one can either be 20 years forgiveness for undergrad loans or 25 years for graduate school loans. So that one has more variation in there. Additionally, with that, if you're married, you cannot choose to marry filing separately, which can lower your income. And again, I'm not going to go super deep into all this. If you need to learn about this, reach out to Chris at monzonwealth.com. We can talk through everyone's specific situation because this goes so deep so fast. It's messed up how bad it is and how bad things keep on changing. Outside of the pay plan, the replay plan, there's income-based repayment plan. That one has a monthly between 10 and 15%, so a little bit higher. But then it also has the 20 and 25 years, depending on when you borrowed, if it was before July 1st of 2014 or after July 1st of 2014. If it's 20 or 25 years, I'm not a big fan of this one because where pay and repay has a 10% over discretionary income over the standard poverty line, income-based is up to 15%. So it's higher. The final one, which is something that everyone should know about, and unfortunately they don't advertise it very well. It's called Public Service Loan Forgiveness, PSLF. What this means is if borrowers choose to go under PSLF and they work in a qualified public service, so it means they're working for the government for the public good. And there is places online through the federal government that you can go and see what qualifies. And you make payments for 120 quarters, which is 10 years, or 120 payments. So 120 months, which is 10 years. And you work inside of one of these government jobs, and you're making the minimum payments, after the 10 years, they forgive the loan entirely, no tax bomb, no nothing. So if you're somebody, say a veterinarian, and you're $400,000 in debt, and you decide to go and work for the Humane Society for 10 years, it would behoove you to make the minimum payments for 10 years, knowing that at the end of those 10 years, it's all going to get forgiven. So try to pay the least amount. Now, at the time of recording, I haven't looked into this recently. The last time I looked into this was like back in July of last year. PSLF has been around for about 10 years now. So what we would hope was that the first people who started the program would be getting out of it. The last time I looked, and this was back in July, so it might be different, no one has been forgiven for PSLF. What it seems like is that the government is basically trying to come back and say that people messed up, they did something wrong, something's going wrong, and they're not going to forgive people's debt. So they made a promise, people stuck to it, and they're breaking it. Again, the system is corrupt. And it's not just the system, it is all things. Each plan has its pros and cons, and the best choice depends on your income, your loan balance, your long-term goals, minimizing your interest rates versus achieving forgiveness. These are all so complex that there is no way that I could put into a 20-minute segment of a podcast all of these things.
Yeah.
This would be individual every single time. So if you're interested in this, if this is you in your life, reach out to me. If I'm not the right person, I have people that I can point you in the direction of. I am not an expert on this, but I'm pretty damn good because it is part of my life. My wife is a veterinarian. We have student debt. And even with the student debt that we have a plan to get rid of it. And we have a plan to be financially free. And no matter what we do at this point, even if we stop saving money, we will have enough money to pay that off and be financially free or be FI by the time we're 60 because of all the hard work we put in. You can do this. I promise you. You just need to learn more information. You can get there. If you could get through grad school, you can get through this. I know it sucks. It's not fair. I agree. And what are you going to do?
That's exactly it. Life is unfair, but we can only choose how we react. So
good on our listener.
Yeah.
Congratulations on paying that off. I wish that you didn't have to. I wish that you could have done a government program and maybe paid it off because you said it took 15 years. So it would have been I guess you would still be paying it. But maybe you could have done PSLF. You said you own your own company, so you could have qualified for that maybe. There's so many different ways around these things. Just know that if you ask your parents, if you ask someone who doesn't know this stuff, how do I pay this off? They're going to tell you just aggressively pay it off as best you can. But if you're $400,000 in debt and you're making $100,000, there's no universe that you can pay it off. It's just this fact. There's no universe you can do it in, especially if the interest rate is 7%. It's impossible. And it is so effed up that we put people in this situation and blame them for it. I wish we didn't. I wish I could help everyone. The best thing I can do is just try to give you the knowledge and let you know that there are ways around it, but it's on you to seek it out.
There you go. That's all we have. That's all we have for that one. That is a tough situation, and I hope you guys reach out to the right people if you do need help, because we're talking with big numbers here, and that can get scary, and that can be anxiety-filled, and it's no way to live.
This video podcast is sponsored by Monzon Wealth. The content in this podcast is for informational purposes only and should not be considered financial advice. We do not endorse specific products or services. Past performance does not guarantee future results. The opinions expressed are those of the host and guests, not the podcast sponsor.
It is crucial to consult with a qualified financial advisor or professional who can provide advice tailored to your specific needs before making any financial decisions, investments, or taking any other actions. If you are seeking specified help, you can reach out to Chris at monzonwealth.com.